Imagine a house of cards right where two plates are grinding and rubbing against each other. That is our housing system in the United States. It's a system that was inherently unstable, inherently flawed, and the subprime lending crisis that is identified as the cause is merely the last card on that enormous house of cards. For those who say this crisis could not have been predicted, I say nonsense. Not only was it predictable, it was predicted. And I'm going to read you a quote briefly. Meanwhile, the inability of working class families to keep up existing mortgage payments has increased mortgage defaults and foreclosures on both owner-occupied housing and apartment buildings. Unable to deal with the causes of mortgage defaults and foreclosure, which lie within the institutions of capitalism, the options available will only compound the problem in the long run. The proposals all basically involve reductions in current housing costs by increasing debt. Adding more claims to future income in these ways only adds to the increasing vulnerability of the entire financial system, as well as the mortgage system in particular. Unquote. Those words were written by me. They were published in the journal Antipode, the radical journal of geography, founded and edited by Dick Peake. The year is 1975. 1975, already, it was apparent to some of us what this house of cards was going to look like at a time when it had far fewer cards than have been added to it since that time. So what I want to talk about first is the structural elements, the basic types of cards that make up this house of cards. Secondly, very briefly, some of the historical dimensions as the cards have been added. And finally, to provide a transition to Bob Pullman, what's to be done, and I want to focus particularly on the housing side of it. Basic structure. The house of cards that is our housing system, and housing finance center today, is because of the fundamental inability of the capitalist system to solve what is an inherent housing affordability problem that arises from the contradiction between the requirements of the labor market on the one hand and the housing system on the other. And these are the two tectonic plates. On the one side is the labor market that sets, allocates, and determines the distribution of income, most fundamentally, for most of us, and which, for most people, yields insufficient income to pay for the basic necessities of life and have anything left over to save. We are a nation of net dissavers, not savers for the most part, except for those at the top. On the other side, we have the housing system, consisting not just of the retail market and housing, but the entire finance system, land system, construction industry, and so forth, which seeks to extract the maximum amount from people's need for housing. And so the labor market tends to exert downward pressures on wages, while the housing system tends to exert upward pressure as people seek to obtain adequate income to pay for housing and other necessities, and together, in which this system can't resolve. Now, what is about this house of cards? Well, just as a deck of playing cards has 4 suits to it, so too the house of cards out of which our housing system is built has 4 suits. And those 4 are, first, wide and widening income inequality, as Dick Peake just talked about. The second is the speculative housing market, in which we treat, to an increasing degree, housing as a speculative commodity rather than a basic need that is a right of all. Third is the overdependence on debt, the credit system, increasingly tied in with the global financial system, of which housing finance is a very, very large part. And the fourth suit of cards consists of public policies that have exacerbated the instability in the other three types of cards. And so imagine starting out, building this house of cards, four leaning against each other, and then piling up more on top of them. So let me say a little bit about each. Dick has certainly powerfully outlined the dimensions of income inequality. And I just want to highlight a few features as they impinge upon the housing system. There are two kinds of consequences that emerge for the housing system with regard to the consequences of widening income inequality. The first is reduced affordability for most people and rising housing prices. Well, how can we explain that? This is linked to the next card, the speculative housing market. But on the one hand, widening income inequality has made it harder and harder for most people in our society to be able to afford housing. On the other side, though, those at the top are largely responsible for driving up the cost of housing as they buy and build more and more McMansions on bigger and bigger plots and tear down existing housing to build bigger houses and bid up the price of existing housing. That income inequality is making it harder for everyone else to be able to afford housing as it trickles down through the housing market. Secondly, widening income inequality has made it harder for most people in this society to save. You know, once upon a time, during that period when we had Keynesianism, middle-class families could pay for their basic needs and actually save some money. It's just the opposite now. On average, not just low-income people, but most middle-income people have expenses beyond their incomes. That is, we're living on borrowed money. And that this savers, this is another consequence of income inequality, and it impinges upon the housing system because it means people who want to buy homes are less likely to have the savings for a down payment. And this will, if we get to the mortgage system, we'll talk about the implications of people not having money for down payments. But reduced savings also mean that there's less inflow into what were the traditional sources of housing finance, so-called thrift institutions, savings institutions, mutual savings banks, credit unions, savings and loan associations. As fewer and fewer Americans have been able to save, those institutions not had the funds to provide finance for housing as they used to in the old days, and have turned more and more to the global capital markets with all the dire consequences that we're seeing. Second set of cards, the speculative housing market. Well, what has happened is everyone thinks they can make a killing in residential real estate. Is really the mentality that is developed in this society. And I'm not just talking about distant investors. I'm not just talking about hedge funds and investment bankers and global financial institutions and stock market traders and so forth. And I'm not just talking about the speculative landlords and the mortgage brokers. Far, far too many homeowners and home buyers have themselves gotten sucked into this mentality of thinking of housing as a speculative opportunity to make a killing rather than viewing housing as a home for themselves and their families. And this mentality, unfortunately, has fed up the food chain from the top to the bottom, and we've got to acknowledge it. This has been made possible by the idealization and overpromotion of home ownership in our society. So linked to the notion of the American dream that everybody has a chance to accumulate wealth through home ownership, well, it's come back to haunt us. It's not the only way of thinking about housing. It's not the only way of providing security of tenure. It's not the only way of enabling people to accumulate some stable wealth. But that is the way our society has offered it. And unfortunately, we have idealized and oversold home ownership for far too many decades. And that's one of the factors that's entered into this crisis that we have to recognize. Part of this is made possible, of course, by the notion that you're always better off economically as a homeowner than a renter. True. That home ownership is a sound and effective way to build assets. Not necessarily true. And that property values will always go up. Well, not necessarily true. And that homeowners are full citizens. The real Americans, with that term, but renters are not. All of this is part of the ideology on which home ownership is built, with all sorts of complicated and contradictory consequences.